Jim, good morning. Thanks for joining us today.
Hey Mark, how are you? Nice to be here.
Yeah. Jim, thanks for joining us. Jim, I'll get to Bangladesh in just a second. Give us an assessment of what's been happening in Turkey today and in the last couple of weeks.
Well, I have to say, I put it against the background of I'm just back from having nearly 2 weeks wonderful walking in the English Lake District, so I've been a bit removed from everything, which was very pleasant. But that, you know, it's pretty upsetting and quite distressing. I often think of Turkey as being a critical country for this complex modern world, in that you know, we would have had this conversation 4 weeks ago, would have been saying what a symbol of how you can combine strong religious-based beliefs with the best of Western capitalism, and what happens here is potentially very symbolic and could have important connotations, obviously, for much of the Middle East. One might think of a future path for Egypt or maybe even Iran down the road would be how Turkey has developed. So for the sake of many places beyond Turkey, it would be really good to see this trouble come to an end as soon as possible. It's quite distressing.
Jim, we've seen measures by the central bank today to stem the volatility in the lira. It's rising as a result of those measures. The Turkish stock market is rising. We've seen bond yields rise, but they are falling today. Jim, is it time to start looking at Turkish assets such as the stock market, which has fallen 18% from when Bernanke testified to Congress last month? Is it time to start looking at the stock market, looking at the bond market? Does it provide value at these levels?
Well, there were two broader things which I think have to be taken into consideration as well. First of all, a lot of the so-called next 11 countries, Turkey, one of the leading ones, have done so well the past 2 years that they were not exactly cheap. So some kind of correction for a number of them, including Turkey, was quite likely at some stage. Whether we've seen all of it, you know, I don't know. I think if we carry on with the kind of trouble we see this morning, then it's probably got more to go. The second thing, which is potentially highly important across the world, is we're seeing more and more signs of US bond yields starting to turn around. And the past many years we've seen large numbers of different bond markets, whether they be the high yield market or many emerging market bond markets, effectively get a huge amount of inflow as a sort of yield carry on top of US Treasuries. And having been around in '94, which is the one full-blown bear market year for bonds, when the Fed starts to move differently on rates, you know, a lot of places that you might not expect there is anything wrong suddenly see some moves going against them. So that's certainly an issue for the Turkish bond market. It's an issue for the Mexican bond market. It's an issue for many, many bond markets around the world. And that, on top of the trouble, suggests to me that people might want to be a little bit careful until we see more confidence returning to the US bond market, which could be a way off yet.
Yeah, I mean, you mentioned Mexico, you mentioned Turkey, Jim. Which other countries would you say, emerging markets we're talking here? Because we've seen such movements, specifically in currencies. You know, I'm thinking of the South African rand, even the Turkish lira, the Indian rupee yesterday falling to a record low against the dollar. Which countries are more vulnerable, most vulnerable to an unwinding, to a tapering of QE? Which countries would you want to pinpoint and make us be aware of, besides the one you've mentioned?
Well, yeah, again, to make reference back to '94, I remember being on a trip to Australia in '94 just after the Fed started hiking, and Australian bonds fell in the first couple of weeks about twice as much as the US. And Australia had not done anything wrong other than the fact a lot of people own the market. So that leads me to two conclusions. Countries with significant current account deficits, India, and Turkey are two of them, and ones that are dependent in particular on so-called portfolio flows are going to be vulnerable in such an environment. So even without the problems going on inside Istanbul and other major urban areas, Turkish market probably would have been vulnerable anyhow. So. Yeah. Even if the protests start, if we see US bond yields rising further and more people thinking about the Fed tapering, that you're going to see some further reaction in many emerging markets, particularly where there's current account deficits.
Jim, do you think that central banks are having a bit of a problem right now communicating? You know, I'm thinking of the Federal Reserve as the primary focus right now in markets seems to be, as you say, when are they going to start tapering? I'm thinking of the Bank of Japan. It was all going so smoothly until recently. We've seen huge volatility in the stock and in the currency market. Are we seeing a sort of a communication breakdown or an inability of central banks to communicate their message clearly to the markets? What's at fault here?
Well, I laugh as you're saying it, Mark. I remember one of the last things I did in my Goldman time was be on a number of different events around the world, which happened to include some quite well-known central bankers of today and yesteryear. And they were all busy saying how experienced they were at talking to the markets, and people shouldn't fear when they choose the time to exit. And here we have this phrase tapering, which I would have thought it had something more to do with the tailoring of people's clothes a few months ago, and it's scaring the hell out of everybody. And that's without them even starting to do anything that much. So, you know, again, going back to '94, if you have lots of markets that have been driven to very rich valuations, and here I'm emphasizing bonds, when the game starts to change with the central banks, then it's inevitable the bond markets are going to suffer. It adds to my belief that we are in 2013 in the early stages of the recovery of the equity culture, and perhaps the end of a 30-year growing love affair with anything with a B on the end of it, i.e. bond. If the US is returning to normality, which I have suspected for a while it is, and the Fed starts to change its own view about that, then at some point we have to get used to the notion of US bonds being closer to 4% than 2%. And anything that's done well in the bond markets, whether it's domestic corporate spreads or high yield or many emerging market bonds, they're going to have some consequence. Ultimately, I think it's something we have to get through, and for those countries in the emerging world that really got strong fundamentals, you've got to get through these kind of points at some point, and that will show the difference between the really strong ones and the not so strong ones. So I don't think it's something people should necessarily fear where the fundamentals are good.
What about equity markets, Jim? As you say, they might re-establish themselves. You mentioned the US. Which other equity markets should investors be looking towards right now as we see, as you possibly intimate, this shift from bonds, the end of this 30-year bull market, into equities? Which equities are going to benefit the most? Which countries, which areas?
Well, you know, I'm so much of a valuation-driven person, particularly I'm thinking of my retired life, so to speak. I think the sort of some unfashionable ones, the European ones, in my opinion, particularly peripheral Europe, still look as though they've got quite a bit of value. And actually, most of the BRIC markets, China in particular, but also some of the others. I touched on India in a negative sense a few minutes ago, but with now looking like Modi going to be standing for the BJP, for the new leader, the whole notion of a sort of Ronald Reagan of India could become a very interesting theme if he looks like he's going to do well. And the Indian market is not so expensive either these days. So I think peripheral Europe and a number of the bigger emerging markets, particularly the BRICS, look interesting to me.
Jim, just finishing on a lighter note, you know I always like to chuck in a Manchester United question. Your view of the new manager, David Moyes? I'm still ecstatic for Alex that he chose
a perfect moment to announce his retirement. He couldn't have timed it any better if he tried. Hats off to Alex. So Moisey's got a very tough act to follow, but he's built to the same toughness as Alex, and so I think he's a pretty good choice.